Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for Friday, the 16th of November. Kind of a uneventful, for the most part, end of the week for the market, but not necessarily the worst thing. I'm all right with that. I hope everybody had a great day trading and have an exciting game plan going into the weekend. Looking ahead to next week's earnings, although we are out of earnings season, you never want to forget that it can always be earnings for a company, right? So looking ahead to next week, we have quite a few of the retail companies coming out: Urban Outfitters, Foot Locker, L Brands, The Gap, just to name a few. There are in the low 20s, 22 if memory serves, but not a ton of S&P 500 companies, but a handful for sure coming out here next week. So we'll see how that goes. It'll be kind of an interesting week for retail. A lot of these aren't huge names, but in the world of retail, we all know Best Buy, Dollar Tree, right? We know these companies, Target. So it'll be interesting to see how we react going into earnings. It didn't go well this morning. You had Nvidia, big gap down. Nordstrom's huge gap down. So not a great slew of earnings to open today. But really, the market showed quite a bit of resilience here today, kind of carrying over some of that momentum it tried to establish here yesterday as the week comes to an end. Here we are in the S&P 500. Of course, we were kind of looking at it yesterday, kind of feeling like we've held support, but wanting to see a little bit of upward movement. And we were able to get that in the S&P. I mean, not a whole lot has changed technically, broadly speaking, and certainly not on the S&P 500's chart in my mind. We're still basically, trying to decide if we're going to hold support and run up to resistance or not. And so, it was a good day, right? It was a good step towards maybe getting the bulls back on board as a collective group, and not maybe just some folks starting to step in. But it was a good start to the day. We've got, moving averages, but always kind of keep in mind when you go sideways, we've talked about this before, those moving averages, in my opinion, at least, present less of a challenge. I'm always going to keep an eye on the 200-day moving average. I've been doing it for too long not to, but I'm just not going to give it the same respect that I would if it were a pulling back for the first time or something like that. When you go sideways, kind of by virtue of going sideways, you end up with all the moving averages in the middle. So it'll be interesting to see if we can continue this 2-day run next week. Over on the NASDAQ, not such a, not bad, but really unchanged. We're still kind of closed right below that old swing low that we, put in way back here, as well as, we tested that and when we first decided to break after the election, we're using that as resistance. When I compare this to the S&P and certainly to the Dow's chart, I still feel that this is more of a bearish looking chart. Choppy, everything's kind of choppy right now, right? But we certainly at least have to get back through that, and we've not been able to do that on 2 fairly decent days to end the week. So let's see how we respond early next week. I'll continue to monitor that as a challenge. But again, personally speaking, the NASDAQ is one of those areas that I say neutral at best right now. If broadly speaking, I much prefer the Dow and the S&P to the NASDAQ and, of course, the Russell. Speaking of the Dow Jones, nice little upward movement. I think we would probably, most of us at least, would probably agree that, from a pure technical perspective, this has held up a little bit better. We've made that higher high already. We've now made that higher low, had a little bit of upward movement on it on the Dow index. So this continues to be, where I will be kind of looking first from that bullish perspective, if that's the way that we want to go. Again, as long as we kind of hold here, if we go sideways, who's going to be all that surprised? We're choppy. Anytime you go from one market, an upward trend, into the change, is this just a kind of a deeper pullback, a hiccup, so to speak, or is this the start of something, bigger to the bear side? Well, there's a lot of volatility while it tries to work itself out, right? And we've certainly seen that. But over in the Dow, I still continue to believe that this is the best looking technical index as we kind of looked yesterday. we just look at it from this perspective, it looks like, hey, let's get in on this retracement, right? And jump in and try to work back up to resistance or through resistance. So I'm excited to see where it goes. Over in the Russell, again, it continues to be, in my mind, the most bearish chart of all of the indexes. I had a, reasonable day today. I mean, nothing crazy. It was nothing crazy in our indexes today, one way or the other. But again, much, like, some of the other things that we've looked at over the week, we haven't been able to break resistance. We haven't really done anything to make us believe, right? At least to make me believe. Break some resistance, then we can talk. But again, as we've discussed on a few instances, even if the Russell takes off, it's going to be really hard for me to trust it anytime soon because, resistance way up here. Just by my, it has to break that. And then it does, it's rewarded with, challenging that 16, which is a big deal in my opinion. And then, of course, we'll have to challenge our 200-day moving average. This continues to be the index that I like the least. And, things can and potentially will change, but they're not going to change on Monday. I know that much. So taking a look at our sectors, had a very nice day over in the material sector. We've kind of been watching that. It was able to hold that support level, that we're kind of eyeballing on Wednesday. Had some nice movement yesterday, and really we're able to carry through on that today. Very happy to see that for sure. I still think that from a pure, bull signal, it's okay to be trading bullish, I think. But for me, we really need to get back up above that 50-day moving average, above this pivot high up here for me to say I am bullish. I'm, looking to trade bullish on the upward swing here in this sector, but that doesn't really mean I'm bullish on the sector necessarily or anything long term, right? Just in the very short term. But a very nice, solid move today. While I'm not overly concerned about it because we've already seen it taken out, I will keep an eye on this price area here where we kind of called it a day today, just because we know that has been something for it in the past. We've already taken it out, last week when we broke through. So I have a little bit of faith that's it can happen. But again, I'm always going to respect support and resistance because my opinion is always biased. But support and resistance are always support and resistance, right? But a really nice upward movement there today. No doubt about it. Definitely one of the stronger areas. Also over in energy. It certainly wasn't me. While I was definitely open to materials as a sector, I was not open to, to energy as a sector yesterday or off of the support bounce. But again, it's important to always note, I understand why people did, right? We never want to make the mistake of thinking because I'm not bullish, I must be bearish as a trader, right? We don't have to be anything, right? But we do need to respect our technicals. Certainly some people were willing to bet on that support level, and it showed, had a little bit of a gap on the open and closed up around 1%, a little bit over 1% actually. It's got challenges ahead of it for sure. If you're looking at this from a bullish point of view, we've got to kind of contend with the shorter term averages. We have to contend with that old 6-week top from the springtime or late winter. Then we'll have to contend with our swing high from up here and then our breakdown point from up here. It's going to have to do a few more things before I'm going to be, bullish. Honestly, I personally would prefer a clean break to the downside. I think that would be an easier read on the chart, at least in the energy sector. If it cleanly breaks this support level, I think that would be an easier signal to trade in the shorter term. But we'll see if that happens. I'm always going to bank on support, and it serves me well. It doesn't work all the time, unfortunately, but it's a good bet in my opinion. But watch us to work and start to have to challenge these different levels. If you're in it, it's understandable. The risk to reward was certainly potentially there off of that bounce. I do understand it from that perspective. I would just keep in mind that there are going to be multiple layers, so to speak, of challenges in the days to come in that sector. Taking a look at the financials, very boring type of day, closing in the green. So we'll call it a win, but really not a whole lot, going on over here in the financial sector here today. But starting to see a little bit more upward movement off of that, much like materials and a lot of things. It's going to be that resistance level, which is just, and oftentimes these days, lining up with the break of the 50 as well for the clear bullish signal. But we're definitely kind of getting some money back into that after holding. It was a challenge. I mean, it came close, but we did hold that low point, for the potential, at least theoretical, reverse head and shoulders type of a pattern. So a nice little upward movement there, but nothing really too crazy over in that area today. Same thing with the industrial sector. I mean, it really wasn't much of anything. It did, kind of maybe shy away from some, potential bears that maybe wanted to get back in because, again, kind of like the Russell, we haven't broke anything, right? We just kind of ran, and then we haven't really faced any challenges or anything just yet. So that was a positive. One thing that we can watch for, and I wouldn't mind seeing it from a bearish perspective, is if this momentum can stall and then we can kind of make that lower high within the lower highs, that would be a lot easier to trust that breakdown down here, if that's the way it plays out. For me, at least, I don't know about for you guys, but for me, if we kind of run into some trouble in through here, start working our way back down, it's going to look an awful lot like there's more bearish momentum. And there's not a lot of support, if we take this out within this sector. I'm not overly bearish on it. I'm certainly far from bullish on it, though. It has to break. While I'm open to things in the financials and materials because they've done some positive things, in my mind, the industrials have not. They've not broken any level of resistance, which that's the key to me. Break resistance if you want me to buy you. So break support if you want me to sell you, right? Now, over in technology, really bounced back yesterday off of that support level. Kind of crept to the upside, but nothing really interesting at all here today. Again, much like the energy sector, there's just going to be a lot of different challenges as we try to work our way back up. Most notably, this little short-term trend line that they kind of use for that little run to the upside, which is going to line up real close to that 200-day moving average. That should be a particular challenge in my estimation if we're able to reach that point. But again, much like the energy sector, while I was not on board with this from a trading plan perspective, I understand why folks are coming in off of the support level from a risk to reward perspective. And we're certainly still kind of in that upward swing here. Not a ton of oomph behind it, right? It's hard to say, yeah, this is, people have really got back on board with it. But hey, you have to start somewhere. A lot of overhead resistance in the technology sector if it's going to continue to run up. I think, again, kind of like the energy sector, I think it'd be easier to trade it if it ultimately breaks down personally. In staples, we had a lot of money come in earlier, a lot of movement early off of that hammer yesterday. And then, technically speaking, the test of the breakout point, kind of teetered back and forth, closing, up, but not nearly as up as maybe it could have. Right. At some point, it was a very nice looking bullish candle, kind of gave some of that back. But overall, I mean, this does continue to be a very strong area. No doubt about it. I think we have more reason to believe that this low from yesterday, this breakout point from days gone by, is a level of support that we really want to be keeping an eye on. After seeing that upward movement, a lot of folks were, entered into this today, right? They believed in that hammer yesterday, had that upward movement today. Folks were triggering into it. And so there's a lot of people that if that's their trading style, they're in, right? At least from a technical perspective. So I think this is, we already thought this, I think, but I think we have even more information today to say that, yeah, this really should be the line in the sand, in my opinion, at least for the the staples sector going forward. But you got to like kind of where it's at, kind of a nice little retracement. Didn't go too crazy today, even though it kind of thought about it. So should be interesting going into next week in that sector, in my opinion. Utilities, well, they love to try to break that, 55 or 55.50, however you're calling it. I'm calling it 55.50, but that approximately 55 resistance, they just gravitate towards that like a moth to a flame, right? We really saw some movement yesterday to the downside. We did see a lot of momentum as the day progressed, and then that translated into a gap on today's open and a run back and a close right at that resistance level again. So, I don't know about you guys, but I don't know how you can make anything out of this that's any different than really where we've been for quite some time. We're trying to break out. You are seeing individual components within this sector breaking out, but as a collective unit, it has not been able to do so just yet. It's been interesting watching it try. And I guess we'll be doing it again next week, right? So over in healthcare, very solid day over there. continues to be, again, one of those areas that, for me specifically, I like better as a bull than most other areas. And I don't think I'm alone. It was able to cleanly hold its, support level. So we kind of still have that potential reverse head and shoulders pattern going on here, right? We didn't have to really ever second guess that maybe developing. And as we work into the 50, we kind of saw that kind of push us down a little bit, although we still close, relatively close to the highs of the day, certainly off a little bit. Really, our major level of resistance, in my opinion, is up here. And this is my favorite technical, sector chart right now. If this breaks, that means I'm probably, obviously, I'm seeing strength in the sector, but I'm probably seeing it somewhat in the market too, right? Maybe the market's not breaking out, but it's probably trying to run up or work towards resistance. That will probably be what it takes to get to and through resistance within this sector. And kind of like we talked before, the thing I've liked about this the most, even back here, last week before we kind of came back down to support, was there's just not a ton of overhead. Well, so many of these other sectors, to one extent or another, have multiple challenges. At least to me, a break here, there's really no challenges to note. That should just purely technically not have a hard time working back up to 96, in my opinion. Yeah, we still have to break it, and that may or may not happen. It doesn't have to happen anytime soon, but I do like that when I look at a chart. I always think, I think about space. Where's the next level of resistance? If I can take out this one, if you're going to sell, why not sell here? Why sell at 94.50, right? Why not wait and sell at 96? Maybe I'm right, maybe I'm wrong, but that's how I always see these charts as I'm looking for opportunities. I still continue to really like this sector as a potential bullish area if we can kind of get a little bit, keep this little bit of a rally in the market going. And I feel personally it's held up a little bit better than some of our other sectors. Looking at the discretionary, kind of a do-nothing type of day over here as well. I think you can argue, from a slight win in the fact that we kind of closed on the top of this little swing back here that we've seen so many times. So we can kind of have it a moral victory that, hey, we didn't break support, right? We breached it yesterday, and it got kind of rocky as that happened, but we rallied up nicely yesterday, and we're able to close back above it again here today. So at least I think we can say that people aren't sold that support's broke. So I guess that is something. Again, this is a type of area that, might have be impacted next week due to all of those earnings in the retail sector that are coming out. So this one should be interesting. That might be, because this is one of those areas that for me, I kind of think about it as definitely one of the Christmas rally areas. Bad earnings will probably end up with a lump of coal in our stocking, at least for these guys. Good earnings can maybe get us to start moving up, taking out some resistance levels, and maybe getting people excited about this sector. So it should be fun. I don't know how productive it will be and what kind of trading opportunities will develop next week, but it should be an interesting watch, if nothing else. So a very strong bounce back day in the real estate sector. We saw that. We looked at that 15-minute chart yesterday and kind of building into that little bullish breakout type of pattern. It hit early today and really ran up basically all the way back to resistance or the previous resistance level, the high that we put in a few days back. Obviously, that's not a major level of resistance. I think we should respect it, and it makes sense that that's kind of where we called it a day today, in my opinion, at least. Our next real challenge is at the 34, and we do know that that has been an issue before. And so just, looking ahead, we were able to, bounce off it. It happened fast. It didn't present a great swing trading opportunity, but we did pull back to test the breakout point. We did see upward movement off of it. It just so happened that it happened very, very quickly and was probably not a very easy swing trade to get into, right? And that's nobody's fault. That's just how it played out this time around. So we have a little bit of confirmation of that break. Again, I think even, now even more so, we know that we probably need to stay above here. We break through that, we're probably looking at a changing in momentum. Not that I expect that to happen, but I do think that is kind of the line in the sand, at least for me. And our next challenge really is at 34. So there is some room, in my opinion, at least for this sector to continue to work to the upside. And then our friends in the communication services, well, for exciting as some of those names might be, pretty boring end to a pretty boring week, right? So closing basically where we've been all week long. Nothing really has changed at all technically. We continue to hold up, but we've yet to break resistance. We've, in my opinion at least, we've done nothing positive, kind of like the Russell, kind of like the industrial sector. It can go up, it can go down just like anything else, but we haven't really seen any signs from a technical point of view that it wants to do anything other than kind of continue to drift with its overall trend. And that is how I will continue to be treating it until it convinces me otherwise by breaking at least something, right? Get me to start thinking about potentially buying. Right now, I can't see a case for it. I really can't. Fine, we don't want to go bearish. Just because we're not bullish doesn't mean we're bearish, right? But I can't see a buying case for this sector right now as a collective unit. So a few interesting moves. We have some nice moves in materials and in energy, at least percentage-wise, in real estate and healthcare. And it was a pretty interesting day, but not a whole lot has changed technically. We know our real challenges are ahead of us, right? We have a lot more real levels of resistance that everyone's going to be watching in the days to come. We'll see how we react if and when we get to that. Volatile last couple of days in the dollar, and we really kind of gave it up here today, closing right there on that trend line that we've been kind of eyeballing as kind of that second level after the 97. We did stop there, but that's all. We didn't see anything step back in. We just stopped selling. And so if this is something I'm potentially interested in a chart that looks like this, I can't move into this, on the next trading day. I didn't see any sign. Yes, it stopped at a sensible place, but there's no turnaround sign, right? But from a purely price point of view, interesting if you are looking at a pullback opportunity here on the dollar, kind of an interesting place where, if we do start to see, some candles build early next week, maybe we could think about it as a retracement. For me, really the line of the sand is going to be back down here at around $96 for a turn in momentum. That kind of will be the next. If we do fail at this trend line, anything can happen, but really our next level of support is going to be that old breakout point there at that 96, in my opinion. Let's see how we, start the week next week. Can we start to see a little bit of a bullish sentiment coming back into it off that trend line? That could be interesting. That could be. But today, we stopped there. That's a positive, but that's about as positive as we can get about it. Over in gold and silver, we saw some appreciation and something interesting happened. A couple interesting things. One, we were able to close back on the right end of that 1220. And at least for me, that mattered. I wasn't trading it, but I did think that was an important number for gold, because it had been so important in the past. Closing back above it, kind of interesting. I still think we have to treat it sideways. But what's interesting to me is if we look at this on a weekly chart, if we look at on a weekly chart, to this huge drop to the downside, we go sideways, we break out, we pull back. Now, by virtue of how this week ended up playing out, we've, at least for the time being, put together a higher low. Now, if we can break that 1240-ish area of resistance, and again, we're projecting right now, but if that's the way this plays out, we can then say, hey, we've made higher lows and higher highs. So that breakout, which would have been a breakout a week ago or 2 weeks ago, all of a sudden seems to me like if that's the way this goes on a longer term time frame, that would be a very intriguing pattern, I think, at least for me. So obviously 1240 is no walk in the park. We may not even get there, but just kind of the way it ended up developing with the failed breakout and then rallying back up and pushing back above. If we can take out 1240 or that 1240 area, probably more specifically, might be interesting. I do think now that kind of becomes the signal that I'll be looking for. Kind of like silver, my signal has always been, well, not always, but lately has been above 15. We were able to push back through here. Again, if folks are coming in to try to trade back within these sideways ranges, I could understand it. I could. It's not me. It's not how I would go about it, but that doesn't make me right. That just makes me me. As long as we hold these support levels that we put in this week, right? Of course, that's going to be very important. But again, as I look at, the metals, I think right now, they're sideways and we can kind of plan for breaks on either side. But that's how I think, at least I will be planning with the metals in the days to come. But really interesting. I really am interested in the way that gold chart developed. if and when we do take out 1240 or thereabouts. It's hard to say. It's not an exact number, right? Natural gas, of course, any excuse to buy natural gas, right? We had that huge sell-off yesterday after the huge rally the day before, and then another big day here today off of that. I mean, we see this, time and time again. When something is, screaming up the charts or screaming down the charts, a lot of times people are just looking for an excuse, right? Any old excuse will do. It was sitting on the 9 EMA, good enough reason to buy. Now, I'm not saying that we should be doing that, and that's a consistent trading methodology necessarily. But when you have these things that are in these really strong moves, you see it all the time, where that's not the 9 necessarily, but folks just look for opportunities anywhere they can get. If you kind of look at it on an hourly chart, you can kind of see it kind of ultimately double bottomed and then kind of broke to the upside. And this is where, shorter time frames can, of course, help, even if you're not trading them, kind of help you understand kind of how things played out. Whoops. Yeah, there's me and my line drawing again. So it ultimately kind of double bottomed and broke to the upside, kind of giving folks a little bit of a little trust, I guess, or an excuse, maybe a better way to put it, to get back in. So very interesting week in natural gas, no doubt about it. Lastly, over in crude, back and forth day. We know that this is going to have a hard time. We know how extended it was to the downside, and it was able to continue to, win, at 3 days in a row now. Kind of worked up into that 58 as its high point for the day before, selling off of that level. Again, I think you're really looking at this the same way you've been looking. I mean, if you were willing to buy crude here, you've got a longer term view than I do on it, and certainly a much more bullish short term view on it than I do. Lots of challenges ahead. I don't think we've seen quite enough to think that this is, we have to immediately turn around and start moving to the downside. We haven't really faced, an intraday. Yeah, we kind of ran up in that 58 area on the intraday, but I don't think we've seen any confirmation candles or anything like that. And I don't think we want it like this. If we see a confirmation candle on Monday, we're just too close to that support level. We need to get, in my opinion, at least, if it's not a breakdown trade, we need to get closer to 58 before we see that confirmation candle. That is what I'm personally looking for. We'll see if I get it or not. But I mean, really, I don't know how you can be bullish on this chart. If you are, it's been a nice couple of days for you, especially compared to what it had been the last couple of weeks. But I mean, really, it's done nothing positive, right, other than have a little 3-day rally. It'll be interesting to see what happens when we start to see some real sell signals on that shorter term time frame, right? Because again, that's how it all starts. Right now, this is kind of what the day traders are trading, or the shorter term time frame traders are trading, an upward trend. But what happens when it runs up, makes a higher low, and then breaks down? Theoretically speaking, I don't know that it'll do that, of course. Well, then there's a challenge, right? That short-term, bias is going to start going the other way, which is going to line up a little bit more with the long-term bias, and should be interesting to see what happens when that happens. So, should be interesting. It's been interesting following crude lately, no doubt about it. Definitely needed a little bit of a relief rally, though. Unless you were, in it, you probably would have been fine with it continuing to fall for a 13th straight day, where it finally broke its slide. But we're all realistic people here. We know it wasn't going to free fall, forever, right? At some point, there's going to be a little bit of a rally, and we saw it here today and this last half of the week. So trust it. I don't. But, best of luck, whatever you guys do decide to do with it. So with that, ladies and gentlemen, that will do us for another day and another week in the market recap. I don't think we got a ton of information this week, from a larger perspective, but we did see things fight at those kind of last lines of defense. And so at least there's a little fight left in it for the bulls right now. And then they needed it. They did. I think they really needed it. So it should be interesting. A lot of retail coming out with earnings next week. So that'll keep us occupied on the earnings front. Should be fun. Should be a fun week, a short week with the holiday. So always weird. It's always weird when the market's not open on a weekday because I'm around the market every day. And so when it's closed, I just kind of sit around and wonder what I'm supposed to do with my time. So I guess I'll watch some football and eat some turkey. But we'll talk about that here next week. Ladies and gentlemen, as always, it is certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the channel and hit the notification bell if you haven't already, so you can be alerted to any new videos or streams that we're doing here on our channel. And as well, be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're keeping an eye on throughout the market day. Thank you so much, Ed. Thank you guys, everybody. It's always a lot of fun. I appreciate you guys being here. I love doing this with you guys. So I hope it helps. If it does, go ahead and give it a thumbs up if you don't mind. That's always helpful and appreciated. Of course, this week, make sure, in addition to spending time doing the things you love with the people that you love, make sure you're getting through the scoreboard, make sure you're getting through your reports, make sure you're combing through your watch list, any scans that you're going to run, so you're ready to rock and roll on Monday morning. But of course, as always, make a little time for you to do some other fun things as well. And with that, ladies and gentlemen, get out of here. Happy trading, and I will see you in the next one.